we got above 35,000, I initiated a short on Bitcoin. Small position, but starting to dip the toe in the water on Bitcoin. Because of the extended move, you're now starting to hit major resistance levels. Now, this is just a starter position. If it goes higher, I have the ability to add to that short.
All right, hello and welcome to Camel Finance. I'm your boy Camel, and that dude works for market makers. I'm telling you, there's no shot this guy really took that short. You'll never convince me otherwise. Perhaps the biggest piece of learning here is that losers average losers, okay? When he says things like, if I go short and it goes higher, I'll just keep adding more shorts, okay? That's how you blow your account up. And the same for averaging down. If you take a long and it starts moving down, don't average down, okay? Just accept, pay the stop loss, accept you were wrong, and work on your timing, okay? Sometimes it's not even your fault. Sometimes things fail. Anyway, moving on. Bitcoin just hit 41,600 and change. So that is a massive move, okay? Bitcoin doing Bitcoin things, Bitcoin causing continued pain. As we set ourselves up for the week, I wanted to kind of go over this and just make sure that we're aware where we are. I believe we have swung from a highly inflationary to a deflationary environment. It says we are here, but this is an old chart. I think we are much more likely in this neighborhood here. And we're going to find out in the not too distant future, right? Because as of the week after this one, we will see the US CPI data on the 12th of December. If this continues to come off, if we continue to see CPI trend down, then we can continue to accept this as the hypothesis. If we continue to accept this as the hypothesis, it tells us we are likely going to run the all-time highs, and then early next year we're in for a deflationary shock and a large pullback in risk assets. So the CPI is, as always, the most important date in finance until, of course, the next CPI. All joking aside, though, the CME seems to know that the Fed is done hiking. It seems to know inflation is going to continue to come down. So as we approach these key dates, the 12th is CPI, the 13th is the rate hike, or I should say rate pause, okay? This is almost guaranteed that we are going to see a pause unless, of course, we get a massively hot inflation print. I don't think we're going to get that. We can also see, looking at the credit spreads, it looks nothing like a credit event. Now, at some point, of course, in the not too distant future, this is likely going to break out, and then we are going to get some kind of financially stressed conditions like we had back here. And of course, all of this aligns quite nicely with this melt-up chart, with this hypothesis. This has been the expectation since these lows back here, and it's been right until it's wrong. So far, it continues to be right. But of course, if this thing continues to validate, right, if everything I've said so far continues to play out as it has been playing out, unless something changes critically over the next few weeks, then we are going to run these all-time highs. And once we run the all-time highs, almost everyone is going to be forced to FOMO into the market. When almost everyone is in the market, that is where we could potentially see the cuts cause the top of this market. We could perhaps see this deflationary bust in line with, of course, this inflation to deflation pendulum swing. And overall, like I've been saying, it's right until it's wrong. So if we continue to move towards all-time highs, then this continues to be the base case. As we can see from the credit spreads, at the moment, there's not even close to a financially stressed set of conditions. But break out of this, and it does open up a credit event like this. There are more stars aligning, of course, because as I've been saying over and over again, we are swinging from inflation to deflation so long as CPI continues to come down. We also have the fact that we are currently under paused interest rates. And of course, the pause is historically bullish. When they start cutting, that is historically very bearish for risk assets. And as if all of that's not enough, remember there's a 4-year cycle low for the S&P 500 due around the end of Q1 of next year. So I continue to use this as my base case. Things continue to play out in our favor. And a lot of the reason for this is because this is liquidity, okay? UST LIC index. What is it doing? Hard up and to the right, okay? So a lot of people have this comment, well, where's the liquidity going to come from? The liquidity is here the whole time. This is why Bitcoin is moving up so early. This is why Bitcoin is so ahead of its current cycle. This is why the stock market is close to all-time highs. And take a look at this, okay? Speaking of Bitcoin, so far, we're more or less on track with a standard 4-year cycle. But there are an awful lot of indicators suggesting that we are about to put in the parabolic blow off top early, rather than do standard 4-year shaped things like this, right? And then halving and then post-halving and then work our way up into a parabola where from the lows, the ultimate bear market lows to the top takes around 3 years before then entering a 12-month bear market. We are actually setting up for an early parabola. We are setting up for one of these repeats here, here, and here. As you can see, I show metrics like this and indicators like this all the time, and all the signs continue to point to further upside for Bitcoin. And continuing with this theme of all signs pointing to imminent upside for Bitcoin, look, all prior times, we saw one of these red circles occur, right? One of these accumulation distribution indicator triggers flash to the buy side. Bitcoin tests the prior cycle's all-time high within 1 month on a closing basis. So it seems like a stretch, but really that is less than a 100% move, which Bitcoin can do in its sleep, as we know. So either this is going to fail for the first time ever, or again, it's another one of these metrics where if we do something like this, by the time we get up here, we'll be able to look back with hindsight and say, well, that was the most obvious thing in the world ever. Every single sign has been pointing to an early parabola, and there is really no signs at the moment of Bitcoin slowing down. So hopping into the charts, not a great deal has changed since the weekend, of course. The dollar, we're still expecting this to make its way down to its 3-year cycle low. Happy days there. Bitcoin, of course, is the big change, and we've seen Bitcoin, look, continuing to squeeze up, okay? Continuing to squeeze up. That cycle low is in focus and is due somewhere around the 15th of December, plus or minus 6 days. So we are going to get a pullback. It might not be this deep though, right? It might well be a much shallower pullback, something more like this, and then we will be looking to go again. And the thing I'm trying to point out here, the case I've been making over and over and over again on this channel, is if we continue up only mode like we currently are, okay, if we continue to do this and we don't start to get massive violent shakeouts, if we don't start to base sideways from here, if we don't start to correct and do something like this, right, if we continue to set this parabola, then we are most probably going to enter an early blow off top. We are most probably going to form a left translated macro Bitcoin cycle inside of its 4-year cycle, and then that means that we have to be open to see an extended bear market, the first true secular bear market for Bitcoin. This could last up to 3 years. It does not predict how shallow or deep the pullback would be in the ultimate bear market low. We may see volatility decrease. We may see for the first time a 50% drawdown instead of a 70, 80 or 90% drawdown. But the point that's important here is if we put in an early top, then there's a good chance we have a very long extended period of time in which this is going to harm the most amount of market participants. And it's funny because I've been calling for this for a long time. Long-time viewers of the channel know that this has been the base case, just like my S&P 500 melt-up chart has been the base case. And I keep saying, I don't want this to happen, okay? I do not want this to happen. I want a higher top than this. I don't want to see this early top and a 3-year bear market decline. I want to see something like this, standard 4-year halving shape, right, and a much higher number. That's what I want to see. But undeniably, if we do not start to base, if we do not start to correct sharply from here and set a new structure, then we are indeed confirming this parabola, okay? We already have the first line of attack. We are potentially looking to set the second line of attack. And from there, we will, of course, be looking to set the final blow-off top move. That breakdown there, if it is to set up and if it is to occur, is my exit signal from this market. I will be one of the most hated calls on YouTube, okay? But again, the viewers that have been here before have seen I've made plenty of hated calls and they typically work out in my favor. Again, I don't want to get too far ahead of myself, but the chart is the chart, okay? The chart is the truth. If we don't base, if we don't pull back, then this continues to be my base case. Again, long-time viewers of the channel know this has been the base case since 2018 when I showed you that printed out chart that I have pinned on the whiteboard in my office. The last couple of things I wanted to point out. So here's oil, still short, still strong. This is a really good example of going against the herd. Remember, when we were back here, everyone was calling for $150 a barrel oil. Everyone was saying, yep, there's a war in the Middle East. And I said, no, the chart has broken down, right? This is the exact same setup as what I just pointed to in the Bitcoin if we continue to go into a parabola from here. So short and strong, continue to push there. The last couple of things we need to take focus of and take note of is, look, gold put in this big upper wick heavy candle. So this is not a breakout above the blue box, as you can see. And there's a very good chance, given where this next daily cycle low is, that we may well have seen the top for this cycle come in, something more like this, pull back, and then look up here to have another crack at it. Of course, the other scenario we could see here is that we end up doing something like this and filling this wick and carrying on. Either way, I'm keeping a laser focus on here. If we decisively break out above this level at, say, 2082, then I want to be long, I want to be strong, and I want to be seeing what the gold market will give from here on out. Massive changes over the weekend. Bitcoin continues to do Bitcoin things. Gold may well have just run some stops and may well now be targeting this daily cycle low. But whether it comes down first and then up, or whether we break out from here, it's going to need to be a breakout that is respected from me. As I've been saying over and over again, we may well, of course, see this yellow squiggle come into fruition. I don't think that's the case. I think gold knows. I think gold is getting ready to see those rate cuts. I think gold knows the dollar is smoked. And I think gold is going to run at the same time as the stock market. That was never the primary expectation on this channel. If you've been there before, you know that. I've been saying this over and over again. I wanted to see gold roll over one last time. But the market has spoken. The market is speaking right now. If this thing's going to break out, then I don't want to be dogmatic. My ego's not going to get in the way. We're going to get long and we're going to see what the market will give. I'm your boy Camel. Welcome to Monday. What a week. What a time to be alive. I love you all. And until next time, take care from me. All the best. Cheers. Bye.